What's up, guys? This will be the 5 stock picks of next week, which is the 16th, November 16th. And I'm going to start giving a quick market review um, of what happened last week and all that goodness. So here is the industrial index, the Dow Jones index. And, well, we had kind of a slightly bearish week last week, and it culminated in a Friday that was very bearish, but really didn't. Fridays don't really have much trading going on. The volume's typically going to be lower, but what we saw last Friday was actually a higher volume. So it's almost as if investors are preparing for something bad to happen next week. You can always integrate investor sentiment into your prediction of the market. But I figured the Dow Jones index was gonna dip anyway because we had a gap right there. So I was banking on that. I have a lot of put options open. I only have one call option, I believe. And last week I exited a trade, which I'll show you right here. I'm gonna be using this for promo. But the idea was, I believe that the Fed is gonna raise rates, and if that happens, real estate is going to go down. So I bought a put option on a real estate 3 times leveraged ETF for $300, and I sold it last week for $700. I actually wanted to stay in longer, and I'm going to show you a real estate ETF you can get in on if you want to play this game. I wanted to stay in longer, but the put is going to expire soon, so I wanted to get out before I eat too much time decay. But this is just an example of how much money you can make with a put option. I always play low in terms of cost, and I just kind of make a few $100 every time I sell a put option. I like doing that. Of course, if you want to put a lot down, you could do that. It's just there's going to be liquidity issues. For DRN, for example, it's not really that popular for options, so you got a wide spread and you don't have huge open interest. I just saw this as a good play, which is why I got in. I probably could have got out higher um, had it been a closer spread, had it been a more popular stock like Apple or like the VIX. But that's just an example. And I'm going to show you a trade that you can go with next week that pretty much mimics my trade. And let's start with that one. So DRN was the one I showed you. I don't want to show you DRN. I'll show you, I think it's DRV. So DRN is a real estate ETF. You're not buying a company. You're buying um, a a fund that tracks an index of the real estate market, and because it's 3 times leverage, it's going to be moving more wildly than the real estate market itself. Now, I don't want you to get in on the bull version. I want you to get in on the bear version, and I believe that's DRV. I typed it wrong here. It's DRV. All right, so this is the bear version, and it's probably going to continue going upward. The only thing worrisome is this gap here. But if you look at the volume, this is probably a breakaway gap. And a breakaway gap tends to go upward, just like right here. Now, most gaps close, but breakaway gaps close a lot later in the game. So if what we're seeing here during last week on Monday is similar to this, you can expect it to rise a bit. Now, how far it rises, we don't know, but the fundamentals have changed because the Fed is going to raise interest rates, and that's going to hurt the real estate market. But let's take a look at the fundamentals anyway. Here's what I like to do. By the way, we're at stockcharts.com. Here's what I like to do for swing trading. We go out for 20 days and 30 days for the moving averages. A buying signal or a selling signal is generated when those two cross, and also when the price is above the 30-day moving average. I also like to look at the Arun lines, the Chaikin oscillator, and the slow stochastics, and I'll explain them in a bit. So let's take a look at this DRV ETF, and let's just treat it like a stock. Don't worry what it means. Don't worry about the fact that it's a bear 3 times leverage ETF. Just treat it like a stock. What we're seeing here with the Arun lines is a cross of the green above the red and then into the 70 plus territory. That's a very strong buying signal, and that was actually generated, it looks like, Tuesday or Monday. So you could have got in on Monday. I actually got out, I believe I got out on Thursday. But you can still get in on this. It's not too late. As you can see, the blue line is close to, by the way, the blue line is a fast line. It's close to coming above the red line. But another important signal is the fact that the price is above the 30-day moving average. Then if you look at the Chaikin oscillator, which is a very hard indicator to explain because it's an indicator of an indicator of an indicator, um, but you can just think of it as how money flows into a stock or a fund. And if it goes up and it's above the zero line, what it means is investors are looking at this and they're putting their money into this stock. So treat this as a bullish sentiment of investors. And the slow stochastics here are a little bit worrisome, but we don't need to worry so much about it because they're still below the 80. But generally what happens is if it crosses above the 80 and then falls below the 80, that generates a sell signal because what it means is the investors in that stock are believing that it's oversold and they're selling it, and investors not in the stock are shorting it. So if this gets into that region, like here, generally what you're going to see is they fall below the 80 and the stock falls too. So let's scroll up exactly from here and see where we're at. You see that? How from here it starts to go downward? Well, that was because people believe that this was overbought and it was time to fall. So we hope that doesn't happen here. Again, this is a swing trade. You get in for the short term, see how far it can rise, and if you see some sort of resistance or if you see other selling signals such as the Arun lines crossing again, then you get out. I believe, yeah, it's pretty cheap. This is 20 bucks, $20 per share, so pretty much anybody can get in on this as DRV. Now ECA is trading at about 8 bucks. I'm not really sure about the company. I know they're into oil and natural resources, which is really not a good industry to be investing on recently, but things are changing now. The price of oil seems to be ignoring a lot of OPEC's tantrums and is actually reflecting supply and demand more recently. You see how it's been falling for a long time, shoots up a bit, it's kind of trending sideways. I'm thinking that the oil market is about to return to normal. Of course, we see a sell signal, but these moving averages are just, we don't really know what's happening because they're always crossing and they're always really close. But what's interesting here is the influx of money, and that's similar to this influx of money where we were below zero, but this time we were pretty much at zero and now we're shooting up. And I think that's a lot safer than buying when it's below zero and shooting up. Yes, we could have made money on this play, but you never know because again here, look at the Chaikin oscillator. We're below zero and the line starts to move upward, but the stock didn't move. So it's kind of risky to bank on that. But I think when we're above zero and we change from a downward slope to an upward slope, it's usually a pretty good bet. And that's what we're seeing here. So if you're into oil at all, if you want to bet on that commodity, this is a pretty good and pretty cheap stock. Now, of course, this is a company, so it's going to act like a company. But what's interesting is during Friday, yesterday, which was probably the most bearish day of the market last week, ECA went up. So don't worry too much about the market for these oil stocks. Don't worry about what the stock market's doing. Just worry about what oil is doing. All right, that's ECA. S is Sprint. I guess it's a pretty crappy company. It's been in the penny stock region for a while. Under $5 is technically penny stock region. We are seeing that it's oversold, and that's our buy signal right there. Now, when the black crosses over the red and starts to move up, that can be a buying signal on its own. If you want a safer buying signal, wait until it crosses above the 20. If you want the safest buying signal, wait until the red crosses above the 20. But usually I think that if you're waiting that long, you're usually missing out on some of the initial gains. Look what happened here. We got the black crossing above, and if we had bought at that moment, that's on this second white candlestick day, we would have made what? Let's say you get in at 4 and you move up to 4.6, and then that's your sell signal right there. So 4 to 4.6, what is that? 46 divided by 40. So there you go. That's a quick 15% profit on a penny stock, which is pretty good. So I'm thinking the same thing's going to happen here. We're oversold again. This is just a pure stochastics play. We're oversold. Get in on this. That gap has already closed, so we don't care about that, but that's probably a good resistance level. See if we can get up to 4.8. Set your sell limit orders at 4.08 if you don't want to constantly watch this stock. But this is a pretty good penny stock play. Then there's Yum. I imagine it's a food company. I just looked at the chart. I don't know. These stochastics, or these Arun lines are just out of whack, so I wouldn't really pay attention when you see something like this where it just shoots up. Probably a gap. There you go. We've got a gap. This gap should fill. This is clearly a breakaway gap. It won't fill for some time, but it should fill. So if you're in for the long run, you can invest on this. And you could look at the weeklies for a position trade where you're waiting for a gap to fill. Now, in the position chart, in the weekly chart, we don't see a gap. But we do see a hammer, which is a reversal signal. Nothing really interesting besides that. But this might be a good swing trade. We don't have to expect this gap to fill, but we do see that it's oversold. And we do see a upward change in the Chaikin oscillator, although it's below zero. And, well, that gap is going to almost certainly fill during some course, during some period in the future. So this is a situation, one of those rare situations where I would probably buy the stock and not an option, but it's really up to you. There's a pretty good upside here, and we've got a good signal, a buying signal now. So if you want to speculate on this, this is a decent speculative trade. If you just want something quick, this is probably not up your alley. I like to find those stocks that are at their low and then will reverse. And you can find stocks that are at their low just by looking at the Arun lines. And then this is a gold stock. If you want to bet on gold, as lots of people do these days because of worries of the stock market, this is a decent, at least swing trade. If you want to invest, you might want to look into other things. I am long on GDX personally, but we got a gap here. And that's what I like about this. The gap's probably going to fill pretty soon, almost immediately. And I'm not sure how much longer that momentum will hold, but that gap should fill. So we know almost certainly that this stock price is going to go up in the near future. How far up it goes, we don't know, but this gap is going to fill. Also, we are very oversold here. Just wait for this black line to move upward if you want to be more safe on this play. But otherwise, this gap is enough to let us know that the stock price is going to rise. All right. So those are the stock picks for next week. If you have any questions, send me an email or please leave them in the comments below because actually that's more convenient for me. So there you go. DRV, that's betting against real estate. ECA is an oil company. Sprint is just Sprint. That's a penny stock swing trade. Yum is probably a decent long-term trade. It's a position trade with a gap, a big gap above it. And then you got a gold stock with a gap above it. That's it.